Good afternoon, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for the Forex trading room for August 11th of 2019. As usual, we'll be going through our standard agenda. We'll take the week, the currency strength meter for last 7 days and last month, fundamental announcements scheduled for the week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. On screen right now is the long-term ledger. Not a whole lot of change. One trade got closed at EURJPY, did close out at a profit once it started to retrace. And we have still two trades open with the Euro Swiss and the Pound Canadian. Both of them are carrying profit right now. Intermediate term ledger, a very, very good week. Have a run of pretty good weeks for quite a while, mainly thanks to the British pound and all the Brexit issues. This week was no exception. We took a profit. The account grew by another 13% or so in closed trades, and we have quite a few trades still open. All of them, except perhaps one, carrying profit, and that one that isn't carrying profit is at break even. That would be that old euro dollar trade opened, well, not that old, but it is the oldest of the open trades. It is at break even right now. The other trades are carrying some degree of profit. Some of them are carrying quite a nice chunk of profit. And last, pretty good recovery this week. I'm making 4% on the trades that were taken. This account always goes in cash. There are no open trades. You can see the trading results on screen. We made 4.02%, collected a combined 230.7 pips, and grew the account a little bit back towards our high from earlier, about a month or so back, when we were at about 15% growth. We're not quite there yet, but we're pretty much getting back to that point. So a nice recovery on this account for the week. Notes and opportunities for improvement. As I mentioned, a nice uptick on all three accounts, with the intermediate being the one leading the pack with a 13% realized gain since last week. Several shocks did hit the market, including a new pound drop, a surprise drop in the interest rate out of the Reserve Bank of New Zealand, and a few back and forwards with the US dollar as different issues played out, mainly the China-US trade war that's been brewing for quite a while. We are in the middle of some great trending, and we're going to take a look at that when we see the charts. So we're at some lows or highs that haven't been seen in years, and indeed in some cases we are making lower lows or higher highs that are actually not even in the charts, in the history of the charts, I should say. So we're at extreme points in quite a number of charts. It is a brilliant time to be trading. Relative strength meter for the last month and the last 7 days, we can see that silver and gold continue to outperform both on the 30 days and on the weekly. And this is a perfect sign of the uncertainty that's coming into the markets. When we see the metals doing good, you never take profit out of silver or gold. That's not their purpose. You do not hold gold for years and suddenly become a millionaire. Gold and silver, what they do is preserve value. So when people move their money away from things that can actually make them money into things that only preserve the money, you know that people are starting to feel fearful. And that is the case right now, which is why the metals are performing so very well. Other than that, we can see on the monthly that the Australian has given up quite a bit of ground. So has the Canadian, though it hasn't done as poorly. The overall loser, of course, being the British pound, followed very closely by the New Zealand dollar. And the New Zealand dollar was really this last week, with their surprise drop in the interest rate, made it go into reverse quite drastically. So it's only being underperformed by the British pound at this point. And really winners, if we look at the monthly, there's not a whole lot of winners we can point to with the possible exception of the Japanese yen. And even that is not a deep win. It has been more sideways than anything else. But it has outperformed all the other currencies, and the only ones that outperformed the yen have been silver and gold. Looking at the weekly, we can see a little bit of a different story. We can see that the Swiss did very well. The yen also performs significantly well, losing out only to the Swiss. But we see the same losers, the pound being the overall loser, followed by the Kiwi, followed by the Australian dollar. And then the rest of them are just sort of middle of the pack. One thing I do want to point out in this slide is that we're seeing some extremes, not just in the lower lows and higher highs that some of these instruments are giving us, but we're seeing extremes in volatility as well. We're looking at 16.5% volatility for the monthly and almost 6% on the weekly. The weekly itself is about twice what it was last week, and last week was a high point for volatility as well. So we're seeing some pretty decent movement. That's what I meant by the markets being in a trending mode right now, which of course is pretty good for us. We're going to make the bulk of our money when the markets are trending. The rest of the time, we're really in it just to stay in the game and be ready for when the next trend hits. So right now is the time to bank some serious profit before these trends end. Eventually they will end, but who knows? They could go on for a year. And of course, that would be the ideal. But whenever you are trending, you want to take as much advantage of that as possible. Fundamental announcements for this week coming up. Not a really busy calendar. I'm having to stretch some of my preferences just to trade some of these, and there is a method behind the madness here in what I'm trying to do this week as regards to fundamentals. We have the unemployment rate, the employment numbers coming out of the UK. Normally, I don't trade this, but given how stressed the pound is right now and the very poor GDP numbers that came out last week that sparked fears that the UK is entering into recession territory, this is probably a good one to trade. It's a very inconvenient hour, at least for me. It's 4:30 in the morning, but we will be trading those employment numbers live on Tuesday. Then we're going to move into an equally inconvenient fundy, and it will be traded for the same reason as the consumer price index year over year out of the UK. And again, I think the pound is poised to drop even further at the slightest bad news, and either one of these, or perhaps both, can be the next nail in that coffin. So we're going to be trading that one live as well. Same inconvenient hour, except on Wednesday. Then we have the employment numbers coming out of Australia in the evening on Wednesday, 9:30 p.m. my time. And Friday, we have the Michigan Consumer Sentiment Index. Normally, I don't trade that one too heavily, but it is at a time when I'm going to be up and about anyway, 10 a.m. So we'll be trading that one live as well and see if it does give us a little bit of movement on the US dollar. Moving on to our charts and starting with oil, a particularly bad week, especially towards the beginning for oil. It crashed yet again, dropping below 52 for the first time since somewhere back in May. And it did recover the final 2 days of the week. So Thursday and Friday pretty much went back to where it had started out the week. So a flat week for oil, but we can see that the pressure is more down than up at this point, and it has established a new outer trend line. We can see those trend lines fanning out. We're definitely in a different market to what we were towards the first quarter of the year when oil was only going up. So right now it really hasn't picked the direction. It's revisiting prior lows, and it could go in either direction at any time. Euro dollar had a nicely bearish week the week before. It had popped back into the descending channel. This week it went in reverse, mainly due to dollar issues. So the US dollar didn't have the best of weeks. It went all the way back up to the underside of the Ichimoku cloud, bounced off of that, and then did a little bit of a recovery towards dollar strength the latter half of the week. Didn't quite make it back down to where it had started, but as I said, it went about halfway back and is sitting on top of a line of support. No significant triggers here. And again, we did enter one trade and it is at break even right now. So we're going to let that trade continue to run for a while and see if it does continue trending in our direction. But this is probably a candidate trade to get out of at this point if it doesn't move pretty quickly. Pound dollar, of course, is one of those trending pairs, and it couldn't be trending any better for us. It's given us new lows, new lower levels of support, and in fact, it is at a low it hasn't seen since back around the Brexit vote right now, and we're already in this trade, and we're carrying a nice chunk of profit. No change there. It's in the low 120s, and it's probably going to drop below 120 at any point. So we'll continue carrying that bearish bias on the pound and trade all these pairs in that direction.
Excuse me, Andy?
Yes, go ahead.
Sorry to interrupt. I'm getting a zoomed in view of your screen, and I'm not sure whether that's a problem with my connection to the Zoom session, but
that is odd, but I can certainly stop it and restart it and see if that helps.
I can still follow along fine what's going on. I just figured it'd be better to holler now than wait till the whole session's over.
No, absolutely. I appreciate that. Let me know when it comes back.
Okay. Ah, there it goes.
Perfect.
Looks
and let
correct.
me know if it glitches again. Thanks a lot, man.
Yep.
Okay, so USDJPY had a nicely bearish week, but it did sort of slow down towards the end of the week. It made I'm going to say a low it hadn't made in quite a while. It's still not below that spike from back in December, but it's getting pretty close. So this is definitely in a bearish mode. It looks like there is dollar weakness and yen strength at play in the market right now. Obviously, we'll have to wait and see how the week kicks off, but we're definitely bearish. And if this one breaks the bottom level of support, we're definitely going to be going in all guns blazing. Moving on to our USD Canadian, this one didn't fare as well. So where we're seeing yen strength against the dollar, we definitely have been seeing Canadian weakness. That said, it is a retrace. The CAD did strengthen quite nicely up through the beginning of July, and then it started doing a retrace. It came out of the Ichimoku cloud bullish, so it crossed the cloud, bounced off the next level of resistance right above, and is now crossing the cloud again in the opposite direction. So this is becoming a very tough pair to trade, as it is trying to go in both directions at once. We have been taking small trades, well, short-term trades on the USD Canadian, and I think we made out better than not, but we did have some losing trades along the way as well. So we'll be keeping an eye on this one to see how it starts off the week, but I will be very cautious with it. USD Swiss is pretty much the opposite of that. It has returned to its prior low. It's been testing that level of support at the 97 quite a few times, and we are waiting for that next break. So it looks like Swiss strength is coming back into the market. Again, part of that uncertainty we were speaking about earlier as regards to metals. The Swiss franc is also a safe haven, as is the Japanese yen. So we would expect those two to be moving into positions of strength as uncertainty continues to increase in the market. As it stands right now, I am waiting for it to break that level of support before I go into the USD Swiss for a longer term trade. Aussie dollar, well, the Aussie has been stressed, and we'll cover some of the reasons why in one of the future slides. But long story short, the economic outlook is not looking too good for Australia or New Zealand, and the recent interest rate reductions have simply hammered that point home. So we have seen the Australian and the Kiwi losing ground significantly. The Australian against the dollar did break the lowest level of support that we had on the screen, gave us a new low below that, and now that is the new target to be reached at around the 66.75. And of course, I would be looking for even deeper than that. Kiwi dollar, what I said before, same thing as with the Australian. We can see that it gave us a lower low, the lowest low on screen right now. Did a retrace off of that and is, well, that would be the new target, and we'll be looking for opportunities to trade it in that direction. The Kiwi was actually recovering quite nicely against all the other currencies until last week happened to it. Against the dollar, it hadn't been faring too well for a while now. But this prior week just gave it the I'm going to say the coup de grace, the death blow, and it is now in free fall as far as I'm concerned. Aussie Canadian also gave us a lower low, but then retraced off of it, and on Friday was attempting to get back down to that level. We've been taking some nice profit on this pair in the intermediate and the short-term accounts. We had been trading it on the longer term, but it got a little bit too wishy-washy. If it does continue dropping, I'm going to have to revise that and start going back in on a longer-term trade. Euro Swiss, we've been trading it. We've been taking profit. Not much else to say here, except that in the last couple of weeks, it has broken out of the bottom of the channel and is giving us, again, lower lows consistently. So this is another one that is trending quite nicely, and of course, we'll continue to ride it for as far as it wants to go. Euro pound, obviously pound weakness for all the reasons we're aware of. It did break out of its prior high and stayed that way at least over the weekend. So it popped above 93, which was our entry for another long. I've lost count. I don't know how many trades we've taken with the euro pound in the last few months, but it's quite a lot. We've been writing this one up all the way from the bottom back in April, and we've just re-entered it yet again. We'll see how far it goes, but right now it doesn't seem to have a ceiling. It's broken past that prior high from quite a while back and is still going up. EURJPY, broken out of the bottom, giving us some nice movement. We also have a long-term trade on this one based on the break of support earlier, and we'll continue to be holding on to that trade. It is at profit, carrying a little bit under 100 pips last time I checked. And again, it is moving in our favor. It is trending. Nothing more need be said. We'll continue to ride as many trends as we can, especially on the longer term accounts. Euro Canadian, very wishy-washy, going in both directions. Does a month, a good month for the CAD, then a very bad month for the CAD, and it just keeps taking turns. It did break out of the levels of resistance before finally finding something that stopped it, and it's now making its way out of the bottom of the Ichimoku cloud, trying to trade its way down again. I will be trading this one. I'll be trading any movements, any valid triggers I get on any of these, but this is one of those where I would be more careful than not. Pound JPY, you're going to see this on all the pound pairs. They're giving us lower lows, lows that haven't been seen in years. And this one also shows no sign of stopping. We've got open trades on the pound JPY. They are at profit, and we'll continue to hold them for as long as it takes, especially if they're moving in our direction. Aussie JPY also gave us a lower low last week, bounced off of that, and is trading just slightly above it. So this is another one where we'll be looking for opportunities to continue going in short. Euro New Zealand, as I said, the Kiwi was having a pretty good period. It had been recovering, especially against the euro, and that all ended sometime around the last week or two of July. And since then, the Kiwi hasn't been able to catch a break. So it has broken and given us a new high, a high that's the highest high on the visible portion of the screen. We have to go quite a ways back to find a higher high on this pair. Obviously, that spike was the fundamental. That was the interest rate reduction out of the Reserve Bank of New Zealand. And it was an overreaction, and the market realized that and went back down to the prior level of support. But I think longer term, in the weeks or months to come, this one is probably going to continue going up. So we'll be looking for good opportunities in that direction. Pound Canadian, I'm getting repetitive here. But yes, lower lows. It's a pound pair. It's going only in one direction. This is what we mean by a trend. When you can catch on to one of these trends, you got to ride it for as long as it goes. And we've been doing that very safely. We short it, we get out on the retrace, we get back in, get out on the retrace, and we'll continue repeating that approach because you know what? It's been making us a nice amount of money. But now that it's definitely in a trend, we do have a longer term trade open where we're just going to try to write it down for 500 plus pips and see how we do with that. And last but not least, the pound Swiss, same thing. I could have been showing you the prior chart. It's giving us newer lows. The only difference with this one is it hasn't actually given us a valid low since somewhere back up here. This is the last valid low, if you can see where my mouse is moving. We don't have any other low that has two candles higher on each side. So we're still waiting for that next lower low. That means it's gone all the way from up here without even the hint of a retrace. That is about 700 pips, well, 600 pips and counting right now. And we've pretty much taken the bulk of that, actually more since we've been shorting it since all the way up here. But this movement, we've pretty much taken it all as well we did with this one back here. So this has been one of the most productive pairs that we've been trading since the beginning of the year, and it shows no signs of slowing down. Eventually, there's going to be a pullback, so we got to be ready for that as well. But for now, it looks like there's only one direction to be trading the pound, and that's down. That is the end of the charts. We're looking at some of our setups in progress. The UK, we've said it throughout this entire session, the pound has lost all concept of a floor. It's in free fall, and all the talking heads are now seriously considering parity with the dollar as a possibility. It was said in joke, in jest, for quite a while, but now they're actually saying that there is a good chance that £1 is going to equal $1 before all this Brexit stuff is done. If that is the case, we're going to be making out like bandits. I mean, we're talking even on a small account. This might be one of those 200 or higher % years if this plays out the way it could in an absolute disaster scenario. That doesn't mean it will. So we have to be very careful. We have to apply all our risk control and make sure we're not taking unnecessary risk with our equity, this, that, and the other. But we have to also be open to the possibility that this is going to happen, and we're going to be taking advantage of it. Switzerland, the Swiss pairs. The Swiss is a safe haven currency, so it is natural that it's going to be getting stronger as all these other geopolitical events play out. It's still in a rally. It's had a few retraces, but it is heading consistently down. So that's the entries we're going to be looking for on the Swiss pairs are going to be into Swiss strength. Canada has also been finding strength, but also having these very deep retraces. You have to be a little bit more careful with the Canadian pairs, because when they do these retraces, they can wipe out 200 or 300 pips in a day. So you got to have proper risk control. You have to have your stops in the right place. Very productive currency to trade, but also be very careful with it. The dollar. The dollar is probably what concerns me the most at this point. It keeps getting stronger. Even when we're having bad news, the dollar seems to come out on top, and that's completely unnatural. At some point, there will be a price to pay for that, and we're going to have a significant weakening of the dollar. That doesn't mean it's going to happen today, doesn't mean it's going to happen this month, doesn't mean it's going to be happening this year. But we have to be very careful with the dollar because eventually it is going to hit. And when it hits, it's probably going to be a black swan. It's going to be a 1,000 pip movement in a split second. And those are the most dangerous things that can happen to a trader. So be very careful with any open dollar trades, especially over weekends. You can't avoid all risks. So I'm not going to be changing my approach, but I can take a hit. You guys, some of you are starting out, be very careful with the dollar until that correction actually happens. And last but not least, the Australian and New Zealand. So Aussie and New Zealand pairs, they are very stressed, and I already covered pretty much the reasons why. The economic outlook for both of these countries has been very dovish, coming out of their central banks. And of course, last week's surprise drop in the interest rate out of New Zealand. I shouldn't say surprise drop. Everybody pretty much assumed they were going to drop it, but they dropped it twice as much as people expected them to. So that was the surprise part of the drop. And we can see how the Kiwi weakened immediately and the Australian as well. And that is going to be it for me. Final words here. I just wanted to point out support and resistance, how important they are. And you probably saw that in the charts. I was talking about pairs making lower lows and higher highs. All that means is that they broke through support or resistance. People are always asking me, what indicators should I use, or what's the secret to success in the market? What analysis are you doing? How do you know which trades to get into? That's not the secret. I'll keep saying it till I'm blue in the face. The secret here is risk control. That's the only secret ingredient to the success here in the market. You have to take as many trades as you can. Obviously, there has to be some reasoning behind the trades, but you also have to control your risk because most of those trades are not going to work out. They're going to be small losers. So you have to take all these trades. You have to look for support and resistance breaks. That's what's going to tell you in what direction to trade. And we're going to take every single trade that we see where they do break support and resistance, but they're not all going to be winners. Most of them are going to be small, and that's where risk control comes in, losers or small winners. So we're really going to come out even. They're going to tend to cancel each other out. But every now and then, I don't know if it's 1 time out of 5, 1 times out of 10. I don't care if it's 1 times out of 100. Some of these support resistance breaks are going to move hundreds of pips. That's what we're looking at. We're looking for those breakouts that are going to give the account a quantum leap, that are going to let the account grow 10+% in a week and then stay up there. And then we just keep doing it. Eventually, we'll come to the end of the year and we'll find out that we doubled the size of the account, which is what we were looking for in the first place. But you can only do that if A, you're trading your triggers, which for me are pretty much support and resistance breaks. And more importantly, that you are controlling your risk because you realize that not all of them are going to be winners. So we're only going to be risking a small amount of money, expecting to lose it now and then. But that's the price we pay in order to be in those big winners. Those are the ones we're looking for. Everything else is just buying that ticket to get on the ride every time, never knowing when the ride is suddenly going to go where you're wanting it to go. But you have to be on that ride before it can take you there. You never know which trade is going to be the big one. So those are my parting words here. Any comments or questions from anybody? Okie dokie, then I will be sending a recording of this out in about an hour or so, and I will see you guys tomorrow for our first session at 8 p.m. Have a good one.